It has been no secret that the stock market this week has not necessarily had the greatest of weeks. And today I'm going to be going over all the key and important information so that you can be up to date in what's happening in the markets. So recently on Sunday, 23andMe filed for bankruptcy. Now, in case any of you have been living under a rock, 23andMe is a business that uses customer spit samples to show ancestry in terms of family tree, origins, percentages, and over 80 personalized reports can be accessed once you actually give the spit samples, pay your $99, and wait a few months for them to test all of your samples and try and figure out where your ancestry is from. Now, 23andMe has had kind of a rocky start these past few years, especially as they've tried to battle the problem of how on earth they're going to get repeat customers, as once you use 23andMe's services once, you have no need to be a repeat customer of 23andMe. And this has actually led 23andMe to try and mess around with multiple different business ideas and try and change things around. So they actually tried to launch a subscription-based service, and that, of course, was not received well. And then they tried to pivot into health, specifically using these reports to try and make pharmaceutical drugs and try and do early screenings, which I kind of like as an idea, but they just weren't able to properly do it. Now, a couple years ago, 23andMe's entire board resigned, in what left a lot of people a little bit concerned if you were an investor with 23andMe towards the hopes of the company being able to stay afloat. And recently this week, the CEO, and I'm going to mispronounce this, Wojcik, has stepped down from her CEO position as she's been unsuccessful in her goal of personally buying the company and taking it private. So since she's been CEO of 23andMe, she has accumulated about 49% of the voting rights for 23andMe, and has multiple times now tried to fully acquire 23andMe and take it public. And again, she's the one who primarily led the push and pivot into trying to feature 23andMe as a health provider and, of course, in the pharmaceutical world. Now, 23andMe at the time of recording this is a whopping 73 cents per shares in the after hours, and this is already after doing a reverse 20-to-1 split in October, which 23andMe conducted in order to still remain in the NASDAQ and file with NASDAQ and still remain all of the requirements with their share price being so low. Now, Chapter 11 bankruptcy, which is the one they're actually entering, is great because 23andMe, it allows them to still continue business and still derive revenues from, of course, their spit samples, but also now it lets them legally sell all their user data. Now, 23andMe, there is a lot of benefits to be gained by legally selling their data, but they're no stranger to selling their data, as they've done it illegally multiple times and been sued into oblivion for it. Now, I find it kind of funny because the California Attorney General recently issued a warning to consumers in his state to make sure they logged into their 23andMe accounts and delete all of their data. But again, they sold all of their data in 2023 to China already. So really, more than anything, Xi Jinping already has your personal data. So sorry, Tabitha in Idaho who works at Walgreens. You no longer are Tabitha who works at Walgreens. Now Xi Jinping is Tabitha who works at Walgreens. And really, if it makes you feel better or allows you to sleep better at night, then for sure log into your 23andMe account and delete your personal information. But in this day and age, it's already been sold, and they've already been sued for it being sold. So now you can just willingly, if you want to, if you haven't already joined the data selling spree, you can actually pay 23andMe still about $99 for their standard version, or if you want to upgrade, you can pay them $200 to get 80 personalized tests and legally sell your information to whichever company ends up buying all of their data. We'll have to see what company that becomes, but regardless, it's already been sold if you've been on their platform. But if you'd like to get in, now's the perfect opportunity for that. So, how exactly did we get here for 23andMe? 23andMe 6 years ago was one of the most powerful companies in their space. They were actually a thriving company, and it was very popular stocking stuffer for Christmas, lots of family gifts, and it even has support from the FDA for their services. Again, though, 23andMe, and still has not been able to, has always had the problem of not being able to retain customers, because once you use their service once, you have no need to go back and do it again, because all of your data is already there. You can already see all of the things you were trying to find. But again, 23andMe still not been able to solve that, even with multiple pivots. And after multiple rounds of layoffs, failed pivots into pharmaceuticals, 23andMe is now going down for the count. Now, moving on from 23andMe this week, we also had another very exciting bankruptcy, that being Forever 21. Now, a lot of you will know Forever 21 as being a mall staple. Remember malls, remember shopping malls. You might still find them if you're in a tiny city. It's that thing with an Auntie Anne's in it and like 2 stores that are still open. However, Forever 21 is now going bankrupt, and unlike 23andMe, they're just actually folding in, giving up, and selling all of their stores and shutting down businesses. Now, you might think that this is a final straw hit for malls, but actually, surprisingly, a lot of the response to this has been very positive by mall owners, specifically luxury malls. All of the tiny regional malls still dying. But luxury malls are actually excited and celebrating because Forever 21 has actually been very hard to get money out of. They haven't been good rentees, so essentially they're able to evict their terrible tenants and get new ones, as currently luxury malls are having a hard time filling in all of the spaces because they're completely full to the brim with their luxury stores that are already generating profits. Now, this is actually quite interesting for any companies in the mall space. So if you want to look at American Eagle, which has done quite well recently, and Abercrombie & Fitch, which shares haven't done well, but the business behind those two are actually doing quite well. This might be an interesting time to look into that space, as they seem to be losing competitors left and right. But malls in general, not doing well, but high-end malls are actually surprisingly doing quite well and are very excited with the closure of Forever 21. Now, again, with Forever 21, they were also killed by e-commerce, similar to a lot of the stores that are going under in malls. But also one that really surprised me is that Shein and Temu have been eating away at the customer base of Forever 21. Admittedly, I was never the target audience of Forever 21, so I didn't see this firsthand, but I know a lot of people who shop on Shein and Temu, and if you're going to be getting Chinese clothes that are crap anyways, you might as well pay significantly less for them than getting upcharged to go shop at Forever 21. Now, another quite interesting bit of information we have that is kind of playing out in front of our eyes is GameStop, the company with an executive board that makes it abundantly clear none of them have ever played a video game in their life, are again changing their business. This comes after, of course, their NFT games and marketplace disaster that happened years after the NFT craze. If any of you remember the NFTs, they were around for what felt like 3 months. Basically, people would buy digital pictures and then would claim ownership of them. And at the time, these would sell for ridiculous amounts of money, kind of like that banana being stuck on a wall and people calling it art. That was probably about the same level of actual value you had with an NFT, except that at the end of the day, you could actually still own a banana, whereas an NFT, you could own a picture, but just you could screenshot it. And I might get some hate for that, but look at the value of NFTs since their peak. They're probably not coming back. So again, from the company that brought you a Fortnite ripoff, actually, I don't even know if they completed the Fortnite ripoff. They might have completed the Fortnite ripoff. They had an NFT marketplace where you could buy your characters, and it was a straight ripoff of Fortnite, even the videos, and they made an NFT marketplace. Both of those sucked. So now, get this, they're going to be stealing the MicroStrategy playbook well past when they can get Bitcoin at a decent cost basis and significantly worse than how MicroStrategy has been able to perform. So again, they just announced it was a unanimous decision across the GameStop's board of executives, and they're going to be issuing $1.3 billion of debt, as well as closing 14% of their stores to fund this shift. And we'll see if this is the second coming of GameStop. I'm going to put in a guess as no. But if you're already invested in a MicroStrategy or a similar scientific, admittedly, I'm not that familiar with that space in terms of the Bitcoin Treasury companies. I really just know those two. But if you already own any of those companies, now's probably a great time to maybe think about adding more funds into those types of companies, because now GameStop is also going to be adding to boosting up the price of the pre-existing giants in there and getting Bitcoin at not a great cost basis. Now, finally, we get to the most depressing part of the week, I'd say. We had a new tariff of the day get announced yesterday. So Trump and his administration announced they're going to be implementing a 25% tariff on vehicles manufactured outside of the U.S. And these tariffs will be added to the list of reciprocal tariffs slated for implementation on April 2nd. It just occurred to me, I remember on Wall Street Bets there being this thing on how anytime Lil Yachty drops an album, it's always going to be a terrible stock market in the next months to come. This actually has the potential to see a new rapper album lead to a recession, and that would be Key Glock is also dropping his album April 2nd, along with the reciprocal tariffs. So keep an eye out in case we get the Key Glock album drop recession. That could be quite fun. But Canada and the EU have now added duties of their own, which Trump has warned them against doing. He doesn't want to see them team up. He just wants to be able to implement tariffs and nobody do anything. And once again, it would appear Trump has gone against trade agreements that have existed with our two largest trade allies. Currently, the tariff impact would impact finished cars and automotive parts that do not fall under the U.S., Mexico, Canada trade agreement for automotive, but the Trump administration has already said they're going to try and find ways to tariff around that, so keep an eye out for that. And also, it's worth noting that half of the vehicles sold in the U.S. last year were assembled outside of the United States. So overall, this will be a big hit to consumers. If you're going to buy a car, you have a couple days now. I'd go ahead and start working on that before April 2nd. So something to bring up also of note, because it popped up across my Yahoo Finance and Wall Street Journal, and I just found it kind of funny, is Elon Musk coming out to say that these tariffs actually are a huge impact to Tesla. Now, unsurprisingly to, I would say, anyone, they really aren't. And that's because Tesla manufactures its U.S. sold cars domestically already out of its two manufacturing plants in the United States, which is why Tesla stock actually saw a giant jump up announcement on these new tariffs. And also, it's worth noting recently that Trump has been actually warning all of the United States car companies, so the Fords, GMs, Rams, all of those companies, that they need to not raise prices during these tariffs. And if so, it's going to be bad for them, and he's going to find ways to punish them if they raise prices. And yet he expects very large companies to just let their margins be eroded by tariffs without raising prices. So that definitely won't happen. We'll definitely be getting car price increases. Also, it's worth noting that a lot of the American car companies still manufacture or buy parts outside of the United States. So it's not like we're instantly going to see these companies pivot immediately to all United States manufacturing. Really, that's going to be a multiple year step. To do that, Trump will already probably be out of office by the time most of them get operations fully in the United States, if they ever do, because honestly, even with the tariffs, it's going to still be more expensive to manufacture things in the United States. Then I guess today there really isn't much to update besides that. The Fed kind of reacted a bit on some of these tariffs, and there's a lot of uncertainty. And of course, the price readings came out, and they were obviously hotter than expected. There was a steep jump, a little bit, significantly higher than originally anticipated because of the tariffs going into effect. And I guess the longer we go down the line, the more we'll kind of see the effects of those and how those play out on prices. And then also, Walmart CEO came out today to give his outlook for Walmart in the future, and they are not exactly excited as consumers are already showing shopping trends that they expect uncertainty, and they're really already feeling the impacts of higher prices from tariffs. So again, look for all of the major companies to raise prices, even if they aren't necessarily affected by tariffs, just because they can, and this now gives them a great excuse to raise prices, and they all will. So again, bit of a down week for the market. Sorry to be the bearer of bad news, but hey, at least we can all laugh at GameStop's executive board being way out of touch with what consumers and with what investors actually want. So there you go. Thank you.